Hello, my name is Jānis Čupelis, and today with Dienas Bizness is Vytautas Plunksnis, board member and head of private equity at INVL Asset Management, partner of INVL Baltic Sea Growth Fund. Correct?
Yes. Hi.
So, yeah, first maybe you could tell us about yourself and Baltic Sea Growth Fund. What's your approach?
Okay, INVL Baltic Sea Growth Fund is 165 million private equity fund, which is investing in the companies in the Baltics and neighborhood countries with the aim to convert local leaders to regional leaders to provide capital for companies' growth. And then from investing in 5-7 years' time, we exit from those businesses to the larger funds, strategic investors, or via listing on the stock exchange.
Yeah. And what is your story in Latvia so far?
So in Latvia, currently we have 2 investments, and fund in total has 7. So big part of investments is dedicated to Latvia. In June 2020, we invested in Baltijā, which is plastic recyclings and waste management group. And this is the most successful investment in our current portfolio, because after our investment, the company managed to grow around 3.5 times.
Wow. And how do you choose your investments? So
basically we look for a couple of things. So first of them is the industry. We would like that the industry would be growing, and there would be enough targets to buy. So if you're doing consolidation, that after investing in the first company, you could consolidate the industry by buying up competitors. Second thing in which we look is management team, because we as investors allocate capital, hire management, but a lot of work is done by the management. So we all things equal, we like the companies which have strong management teams. And third thing we look, will be there an investor after us who will be willing to buy the company. We invest in one company from 10 to 25 million euros equity. So at the time we exit, we aim that those companies should be valued 100 million euros and more. So it means that most likely investors will be not local, they will be foreign, either strategic or funds. So in each case we look other buyers for such companies. So basically we try to not exactly figure out who will buy our company, but look in Europe, in the world, what's happening, other buyers for in those industries or not.
And who could be these buyers? Maybe more concretely.
So it's basically strategic investors who work in the same industries and would like to expand in the Baltics, or financial investors, so funds similar to us, but much bigger. So if there is some story where the company can grow further in the region, enter new markets, so they also interested, but usually they interested in much bigger deals, which are 100 million euros plus.
Yeah, and you mentioned also there is a second example in Latvia.
Yeah, so second example is the company is much smaller than Baltijā, is cosmetics producer Bio2U. So we are trying as well to do more deals in cosmetics and consolidate this industry as well. But Bio2U investment is just 1 year. So basically we still have time to find targets and to grow the company.
So yeah, about plans. What are your plans?
So plans, like as Baltijā, we are very active on doing acquisitions here in Latvia, Lithuania, and abroad. For example, Baltijā's daughter company Pet Baltija last year bought Czech fibers producer Tesil Fibers. So it means that it went out of the region and become truly international company. So in recycling and waste management, we will continue to grow organically and buy other companies. Also, from 165 million, we invested around 100 million and still have money to invest and actively looking for targets. And part of them can be in Latvia.
Yeah, and so some concrete plans maybe how to use this money?
So on exact plans, so you announce deals when you finish them, because every deal which is not signed, it's not signed. So we're negotiating with people, and actually. I arrived to this interview from negotiations with one Latvian entrepreneur, so hopefully there could be announcement in a couple of months from now.
I see, and good luck to you. All right, then what industries are you more interested in nowadays?
So basically, I would say traditional industries, manufacturing, export-oriented, the same recycling, where Baltija is active in Lithuania. We have a couple of investments in healthcare space, so this is also interesting for us. So basically, we are industry agnostic and try to find good companies in almost any industry, and the prerequisites are that the company should be willing to grow, willing to get bigger, better, because there are some businesses which are happy with the situation they have, and our aim is in 5 years triple the company, more or less. So.
That's quite ambitious, I think.
So yes, but as well, so we have few examples where it's possible to do even more. So for example, in 2019, we invested in second largest healthcare clinics chain in Lithuania with the revenues of 10 million euros, and last year's pro forma revenues were 100 million euros. So basically even faster growth, and this investment, even though it's in Lithuania, it as well has Latvian angle. Because we joined forces and merged with Lithuanian company which was owned by very successful Latvian group Refarm. So owners of Melnės aptieka. So now we have a company where we own 45% and Refarm owns 40 and CEO 15. And I think this case shows that one of our strengths is ability to partner with local entrepreneurs, other funds, and in our history we had, I think, the biggest amount of partnerships if we take Baltic investors.
And you are actively seeking for these companies yourself, or what to do to attract your interest?
So basically, send an email or call. We are very open, and if idea sounds good, so we happy to meet, spend time analyzing it.
And on the whole, what do you like in Latvia? So, regarding our investment climate or economics, and what not so much?
So, in a way, in terms of deal making, Latvia is a little bit more difficult than Lithuania.
Why?
And I think one of the differences is in corporate governance. So basically there are some very strong and very good companies which are owned by let's say one owner who is running this company as a family business, and then it's sometimes it's hard to explain why this or another transaction is done. And also I think a lot of Latvian businesses, even though they are very successful and profitable, somehow avoid expanding to other markets, because in your local market, your local company, you can control everything, and if you go to the same Lithuania or Poland or to any other market, so you have to change your attitude and management style, because it's impossible to know everything if you have a lot of different locations. So I like Latvia in a way because those deals are a little bit more difficult to execute. So it means that there is less competition. So basically, you can get better deal if you
because there is less players willing to compete with you. Yes, and some players do not like let's say complicated situations in shareholding structures. So and we as local investor are prepared to spend time to solve the issues. And what would you like companies to think about?
So basically, companies should think how and like in logical steps, how to expand their business and get bigger. So if you are like a factory, so can you install second, third line and expand? Or maybe it's more logical to buy a competitor somewhere in Europe and have multiple locations. Because when we invest in business, we would like to see the business grow. And if there was a proposal that we have nice business, but we are happy with the current results and don't want to develop. So most likely it's not for us.
I see. And on the whole, what do you think about economic situation and how it differs in Baltics and also potential?
So I think like economically, Estonia is the most advanced country, followed by Lithuania, and then Latvia is third, objectively speaking, like GDP per capita and other metrics. But what this means for Latvia, that potential to grow is biggest here, because in general we come from the same starting position, and cultures are pretty similar. Estonia most likely it's ahead in digitalization of the government, and also like majority of successful technology businesses originate from Estonia, followed by Lithuania, which is very strong in fintech and some other IT areas as cybersecurity. But Latvia also has its own unicorns like Printful.
Maybe this kind of question: why do you think Latvians are more risk averse?
It's I don't know. It's maybe it's historical thing. That so this is very hard to say. I wouldn't say that Latvians are not willing to risk, but if Lithuanian companies. So for them, they treat Latvia as a home market, so each Lithuanian entrepreneur thinks how to enter Latvia, and then if this is successful, next big step is Poland. So a lot of Latvian companies they stay just in one country, but why is this is very hard to say.
Yeah. What do you think about the development of Latvian capital market, or maybe Baltic capital market?
So potential to grow this market is very big, because in terms of investors or the companies which are listed, the size of those companies, we are lagging behind the Western markets. Of course, most active and biggest investor base we somehow have in the smallest country, Estonia, and Lithuania is second, and Latvia is lagging behind. And one thing which needs to be solved is corporate governance and mentality of the owners of listed companies, because those companies which listed long time ago, sometimes the owner who has controlling stake, he treats the minority shareholders as he has 100% in this business, and then if you are small investors, so for you it's not attractive, this attitude. And what we're lacking in Latvia, so it's listing of state-owned companies, because Lithuania listed its national energy champion Ignitis. In Estonia, we have Enefit Green, and here in Latvia we are lacking because it's chicken and egg problem that should we first get investors or the objects in which to invest. And I think for state-owned companies, the listing improves transparency, corporate governance a lot, because then you have investors asking questions why this or other decision was taken.
Maybe also your companies could become publicly traded.
Yes, it can be. It's one of our possible exit routes as well. To finance growth, we issue bonds, and in the current portfolio we have 2 companies which issued bonds, and Baltijā recently announced about successful placing of 8 million bond issue. So yes, we remain active participants of local capital markets and don't exclude listings.
I hope so. It would be interesting, of course. And on the whole, what do you think about the current situation in financial markets around the world? There was a bear market, now it's growing.
So it's markets by definition they should be volatile, because if the market is only growing, it attracts taxi drivers, and then we have next crisis. So current market has couple of challenges. So one is rising interest rates across the world, and those interest rates are rising because inflation is very high. Then there are geopolitical issues, and it's only not Russian aggression in Ukraine, but tensions between US and China, and at least now it seems that the world might be divided in a couple of blocks, and as majority of listed companies are global and want to expand in all over the world. So it's in a way bad news, because some of the markets might be closed, or you have choose your allies. But markets they are cyclical, and the best opportunity to invest when there is uncertainty in the market.
Yeah, because you can buy cheap, hopefully. And also about these what to expect in 2023. What could be the trends, and what could be the most promising areas, industries for investing? Maybe defense stocks.
So defense we cannot do by the fund rules. So it's excluded sector. So maybe it will change in the future, but in general, big investors, according to their ESG policies, ask to exclude, hard liquor, tobacco, and also defense is excluded.
But
industry.
What could be even more responsible than defense of your society? No, it's a bit weird. These kind of rules, no?
Yes, I can see this argument, but every weapon can also be used for aggression, and it's long debate, but at least for us, this is excluded sector where we cannot look. So we will not look. I think the sectors what we like, it's healthcare, recycling, veterinary services, and IT-driven companies. I think this bubble in valuations, it's deflating, and now the prices are much more reasonable than they were 1 or 2 years ago. So basically those are major industries. I think it's super hard to make predictions for 1 year, and the most honest answer is I don't know. And at least in our fund, we more look not at macroeconomic situation, but at exact company, and try to think, can this company survive in this volatile environment and gain market share, improve their positions in the market, using the capital we provide for growth.
I wanted to ask, what do you think about whether US stocks will be higher or lower at the year's end? But I guess...
This I don't know.
Very speculative question.
On personal level, I have almost always close to 100% invested in stocks. So I'm long-term optimist, but in short-term in the market, nobody knows what will happen.
All right, and in conclusion, what advice would you give to potential and existing investors now?
So basically, always try to see through the noise, because if you open newspaper, news channel, so basically you can form the opinion that something bad is happening every day in different places. So you have to see through this noise, you have to have long-term strategy and stick to it. And the moments where things look most gloomy usually are the best moments to invest. And I'm really excited about investing in the Baltics, because currently a lot of international players left the market due to the war. So for local players, it's good opportunity to invest and build market leaders.
Yeah, and one more question maybe. Do you see geopolitical discount in Baltics?
Yes, certainly now if you're a seller of the assets.
How big is it?
Competition maybe 10-20%, but it depends on the assets. Some good companies still attract big interest, but in general we see less US funds chasing targets, and I think now the time is for local investors.